Welcome everyone for another weekly AMA covering the crypto markets. And boy, oh boy, we finally have our altcoin season that we have been waiting for. Now, whether this is going to be a sustainable altcoin season or a just bounce like all the bounces that we have seen during this cycle is really difficult to figure out. However, based on what we have seen so far in this cycle, it is most likely a bounce until liquidity comes. When I say liquidity, we're talking about quantitative easing. We're talking about the Federal Reserve actually expanding their balance sheet, which will adding to the liquidity that's being injected by the US government. Both of these liquidity bazookas, if they come simultaneously, obviously will give us the altcoin season and the risk on behavior that we want to see in order for us to have an extended altcoin season like we've seen in 2021 and 2017. We're talking here about a period of 3 to 6 months of price appreciation in altcoins and small cap coins outperforming big cap coins. But for now, we're not yet there. We can clearly see that money is flowing from big cap into medium cap, and then soon it's going to go into low cap. Looking at the current cryptocurrency landscape, we're witnessing a fascinating convergence of regulatory progress, institutional adoption, and market dynamics that's pushing prices higher with a full-blown altcoin season. The crypto market right now is experiencing renewed momentum after months of sideways consolidation, driven primarily by what many analysts have identified as the missing ingredient, and that is mainstream attention. This attention surge isn't coincidental, it's the direct result of significant legislative developments, with the Genius Act now signed into law and the Clarity Act advancing through Congress after passing the House, with potential Senate consideration in September. What does the Genius Act and Clarity Act mean for the people that don't know? The Genius Act is basically a legislative bill that will effectively make stablecoins lawful, effectively enabling banks and companies in the US to issue their own stablecoin. This clear regulation will give the green light for institutions and big companies to start experimenting. And obviously, stablecoin is something extremely important because it provides the on-ramp for liquidity into the crypto asset class in general. Because if you do not have banks allowing capital to flow from traditional fiat system into the crypto, it's going to be increasingly difficult for the crypto market to grow. However, the Clarity Act is a different bill that basically regulates all of the crypto asset class in general. This will clearly define where the responsibilities of the SEC and where the responsibility of the CFTC comes into play in order for them to regulate whichever project that wants to launch any token or anything that is related to Web3. And obviously important and way more bullish for the crypto industry in general rather than the Genius Act. The Clarity Act passed through the House for now, and it still needs to pass through the Senate before it actually goes to the desk of the president for signature and then action into law. Experts expecting to have a vote on the Clarity Act in the Senate around September. We could see the Clarity Act passed into law around October, which will obviously also be very bullish for the market. The regulatory environment is undergoing its most positive transformation since crypto's inception. The Genius Act has effectively unleashed stablecoin as a legitimate financial instrument, creating what many view as the gateway for broader crypto adoption among traditional finance institutions. Major banking giants are no longer sitting on the sidelines. We see the biggest institution across the planet right now wanting to experiment and launch their own stablecoin projects, obviously all benefiting the crypto asset class. And that's why we see all of this bullish price action altcoin sphere.
The expansion of the stablecoin supply has slowed down a little bit. And now that the Genius Act proved it, we could see unprecedented expansion of the stablecoin supply. So this is going to pump all prices in crypto because stablecoins will be able to easily flow into these other on-chain assets.
This institutional embrace represents a fundamental shift from skepticism to strategic adoption, particularly as the SEC signals its intent to streamline the ETF application process for additional cryptocurrencies beyond Bitcoin and Ethereum. One thing also that we all need to know here is that along with attention, we also need to have accessibility for institutions. ETFs enables accessibility for the institutions to be able to start buying not only BTC and Ethereum and Solana, but also when you have ETFs for different other altcoins, it will effectively enable institutions the equivalent of buying the token itself. And ironically, we have a lot of ETF in line for meme coins, which is, in my personal opinion, is actually stupid, but it is what it is. You have Doge ETF, you have Tengu ETF. They have the option to buy it, and that's why it might be a good short-term trade. Market technicals right now paint a compelling picture of sustained momentum with important caveats for timing and risk management. Institutional capital flows tells a remarkable story of unprecedented adoption. Digital asset products recorded all-time high weekly inflows of $4.39 billion. Ethereum has already surpassing the entire 2024 total of $6.2 billion. including a record weekly inflow of $2.12 billion, nearly double any previous week. Ethereum here with this kind of inflows is sitting with the biggest ETFs in existence. Obviously, this should not be taken like, you can clearly see this being reflected in the price action of Ethereum, where it ripped 50% in a matter of a month. This institutional momentum is being further amplified by BlackRock's pursuit of staking capabilities for its Ethereum ETF, following the SEC's recent approval of a staked Solana ETF. The road is clear between now and August the 1st for this bull trend to continue.
The S&P
However,
500 just hit a new all-time high, and it's up 30% since the April 2025 tariff call. So
exactly. Yeah, the breadth of this market is super strong, and all analysts agree on this. We see around 31% increase since the lows that were made around the beginning of April and breaking all-time high again. This kind of momentum shouldn't be faded. And obviously, the Trump administration do not want to see a major correction in the market. That's why they kind of test everything that they want to do before they actually do it. So they throw in a rumor to see how the market will react to that. And then after this, if they see that the market reaction is not overblown, then they go ahead and actually do what they need to do. They did the same with the extension of the tariff, and they also did the same with the rumor of firing Jerome Powell. The level of 15.5 as a very critical area where below it, we might see a potential resumption of volatility in the equity market. And we expect that to happen somewhere between August and September. So keep that in mind. And that's why I keep on saying that right now the market looks amazing to swing trade, but do not be fooled. There is still a lot of risk in the macro markets, geopolitical tensions, tariffs, and obviously the financial system as a whole. Having that in mind, it's very wise to build your hedging while we see all-time high, and just keep in mind the August timeframe where you shouldn't be sitting on too much profits by that timeline. You should have exit most of the swing trades, or at least secured some of the profits that you have made through this trend, because we expect a lot of volatility during that period. The question is just being able to identify where we might be topping and having a local top, because some of these corrections could be severe, especially in this kind of environment where we don't have full-blown QE yet. We don't want to be fully exposed where eventually the market tanks and we don't have QE.
The worst case scenario is following some of these influencers who are saying, we're seeing altcoin season, flip your entire bag into altcoins this time. It's like, approach the market with a risk mitigated strategy so you win no matter what happens.
100%, 100%. And that's why it's super important to keep a speculative bag different than your passive long-term bag. Brandon, have you ever expected the East to jump so quickly? 80% move in 1 month. It's crazy, man.
It's just like we've been waiting for this, so it's not too surprising. It's just I didn't necessarily expect for it to come so violently and so abruptly, and we have these Ethereum treasury companies popping up now. We always knew Ethereum was going to have its run. Ethereum has the most built out on it out of any DeFi or any Web3 ecosystem with utility. We expected it to have its run, and we'll see what its run looks like this cycle. Some people are predicting 10, 15,000.
Yeah, like somebody is expecting 10, 15, which I wouldn't rule it out. This temporary exemptive relief could effectively legalize the entire DeFi ecosystem, including airdrops, tokenized real-world assets, GameFi, and SocialFi applications, while also enabling unprecedented integration between Web2, finance firms, and crypto. Finishing off with the altcoin season indicator currently sitting at 61. Keep in mind that this indicator is a lagging indicator, which means that by the time we hit 75, the altcoin season is already done. Even though we still have some room to catch this rally that we're seeing right now, we are already extended. We will try trading for the coming 2 to 3 weeks and potentially exit most of our bags in the active portfolio by then.
And you can see when this cross happens down here, it exploded last time in 2020, 21, and the cross just happened. Potentially is the time where we're going to explode for altcoins. Quickly that happens is to be determined, and it could be held back a little bit further by the Fed holding back rates. But we obviously see the tension with Trump trying to push an immediate cut from 4.5% rates down to 1%. What else is going to pump the market? These treasury announcements. But this isn't the only one. There's multiple others, but the biggest one worth noting is Trump also joining the game, moving 2/3 of their balance sheet into Bitcoin. So this is a fairly big signal for the president of the United States to be making it's $2 billion of the $3 billion that they have. And if this was made around the last week of prices, it would get him about 17K Bitcoin, which would make his company the 4th largest Bitcoin holder. So Trump is quite literally front running. This tweet is about the 401k that we brought up earlier, unlocking $9 trillion of assets. ETFs and treasuries open access to folks who otherwise wouldn't buy Bitcoin or crypto because of the self-custody hurdle. Folks just reposition their capital in their brokerage account And for us maximalists, we want to have freedom of choice. We know importance about self-custody, but when it comes to the typical person, they're not going to learn self-custody. The masses won't learn self-custody. Hopefully over time, the percentage of people who learn self-custody grows, and that's what the mission in Freedom Capital is. But not everybody's going to learn self-custody. So tons of people can just flip their position from stocks into Bitcoin, crypto, ETF, treasury companies, and retirement savings will obviously be a big door that is opened when it eventually gets approved. We're seeing a lot of demand being announced, but not quite here yet. We might not have this trend last for many months. It might just be weeks, and then we see a correction, and then we see the demand really start. But Trump is educating people on Bitcoin, and a US president educating people on Bitcoin, sharing one of the greatest explanations of Bitcoin of all time, him putting an effort to educate people, it's a sign. Take it for whatever you want. But if people aren't educated about Bitcoin, they won't be on the lifeboat. And if the US dollar isn't backed by gold and Bitcoin, then the masses won't get on the lifeboat, and you'll need education to get people on the lifeboat. So it's good that Donald Trump is doing education. It doesn't necessarily mean he's going to back the US dollar by gold and Bitcoin and save everybody. It's a good sign that we might be leaning in that direction. We'll see. Maybe Vicent and Trump have a stable coin backed by Bitcoin and gold up their sleeve coming, so we'll see. But this is bullish for people who've been waiting for the administration to fight back against the banking cabal. Vicent went on TV and said, all these PhDs over there in the Federal Reserve, I don't know what they do. This is like universal basic income for academic economists. I laughed my ass off when I read that the first time. Like, can't believe he went on national TV and he's saying this. It's absolutely putting the Fed on blast. Vicent wants to show the American people that the Fed doesn't work for the American people, but instead works for the private bankers. And Vicent wants to make the case for the American people that we no longer need the Federal Reserve. And so what I brought up about potentially Vicent and Trump releasing a stablecoin backed by gold and Bitcoin, this is exactly what we want to see for setting up that scenario. So will it happen? We are following it.
To finish off, what does all of this mean for our portfolios? The passive portfolio strategy remains on plan. We always want to split our speculative bag than the fundamental bag. Why? Because it's very difficult to really know when the altcoin season will die, especially in an environment similar to the one we're going through right now, where market is cautiously optimistic. So price keeps on moving forward and up until something or a news or a tweet by Donald Trump or any war that's currently raging across the planet thanks the whole market. And that's why we don't want to be taking too much risk with our passive portfolio. The passive portfolio have a long-term view. You just DCA, chill, and then have a 5-year horizon, not before that, with very minimal trading inside of it. While the active portfolio is where we take excessive risk. We take swing trades, basically intraday all the way to multiple weeks time frame that will enable us to capitalize on all this narrative and hopefully be able to time the top, then exit on time to secure some of the gains that will enable us to double down on our passive strategy and accumulate more and more blue chip coins for the long run. But at the same time, we also need to keep our hedges in position. So right now in our portfolio, we are around 75% hedged when it comes to our biggest position in the portfolio, and that's Bitcoin. We still have small room to fully hedge our position, and we will be doing so when we see that market conditions actually tell us that we have to do so. We still believe that the prices will keep on going higher, and that's why we're waiting a little bit on fully hedging our position. And obviously, once we see a good opportunity, we will let you know as soon as we do it.